Welcome to the Ontario Mortgage and Real Estate Insights podcast. I'm your host, Steve Hamilton. In today's episode, we're diving into some of the most pressing developments affecting the real estate and mortgage markets in Ontario and across Canada. Our first segment focuses on the record growth in rental housing in Canada's largest cities in 2024. This is a fascinating topic that has major implications for both investors and residents alike. According to the latest housing supply report from the Canada Mortgage and Housing Corporation, housing starts in Canada's 6 largest census metropolitan areas increased by 4% in the first half of 2024 compared to the same period in 2023. We're talking about a total of 68,639 housing units started, up from 65,905 units in the first half of 2023. Calgary, Edmonton, and Montreal led this growth, driven primarily by significant increases in rental construction. The focus on rental construction is particularly noteworthy. Developers have been heavily investing in multi-unit apartment buildings. In the first half of 2024, apartment starts totaled 49,172 units, making up 72% of all new home construction in these cities. What's even more interesting is that rental housing construction, fueled by various government policies and incentives, accounted for 47% of apartment starts. That's the highest share on record, translating to over 1/3 of total housing starts. Montreal really stood out in this rental construction boom, with a 106% increase, resulting in 7,192 new rental units, the highest among the 6 markets. Despite these impressive numbers in apartment construction, other parts of the housing market showed mixed results. Calgary and Edmonton set new records for housing starts, with Edmonton posting the second highest level on record. Single-detached housing also saw strong growth in these 2 cities. However, it's not all rosy. Housing starts declined in Toronto, Vancouver, and Ottawa, particularly for condominiums. High financing costs and lower demand made pre-construction apartments less appealing to investors, especially in Toronto and Vancouver. Developers have been shifting their focus to clearing backlogs of projects already under construction. This shift led to a surge in apartment completions across all 6 census metropolitan areas, except for Montreal and Vancouver. Despite these efforts, per capita housing starts remained flat compared to the same period last year. This means that the rate of new construction failed to keep pace with population growth, raising concerns about housing supply and affordability. Aled Yorworth, Deputy Chief Economist for the Canada Mortgage and Housing Corporation, commented that the growth in actual starts observed in the first half of this year is encouraging, considering the tighter financing conditions and higher construction costs faced by home builders. He continued to say that with record low vacancy rates in Canada's largest cities, the increased investment by the private sector leading to a rise in rental construction was much welcomed. However, per capita housing starts remain a concern, as supply did not rise enough to keep pace with demand and improve overall affordability. Municipalities and provinces are actively working to address this supply-demand challenge. Efforts to increase the overall housing supply and offer a greater variety of housing types remain ongoing, even amid regional differences in new home construction. After a protracted slowdown in Canada's mortgage market since 2022, a spate of developments in recent weeks has sparked hopes that a resurgence is in the cards. A trio of interest rate cuts by the Bank of Canada since June has seen variable rates fall at last, with fixed rates also on the way down as 5-year Government of Canada bond yields dip. Meanwhile, mortgage qualification rules are also easing. The federal government announced last week that it was hiking the cap on insured mortgages to $1.5 million and expanding access to 30-year amortizations. Then on Wednesday, the Office of the Superintendent of Financial Institutions, the national banking regulator, revealed that it was removing the requirement for insured mortgage borrowers to stress test when renewing with a different lender. The government's decision to tweak qualification guidelines has spurred a wave of calls in recent weeks, according to Toronto-based broker Leah Zlatkin. Has borrower sentiment toward the market changed? Zlatkin, who serves as Chief Operating Officer and broker at Mortgage Outlet and President of the Canadian Mortgage Brokers Association, Ontario, told Canadian Mortgage Professional that optimism appeared to be growing among the borrower community on the outlook for the months ahead. That is partly a result of the rule changes announced by the government on insured mortgages and amortizations. The second part, a lot of people are starting to look at variable rates, so we're starting to get a lot of questioning around, well, does it make sense for me to lock into a fixed, or does it make sense for me to move to a variable at this point in time? Zlatkin said. Ryan McNeil of Keystone Capital noted that brokers engaging with private lenders and focusing on education are gaining a clear advantage, especially in a quieter market. And that conversation is starting to become more and more front of mind for a lot of Canadians when you look at what the standard rates are right now. The debate among many clients at present, according to Zlatkin, is whether a 3-year fixed or 5-year variable is the better option, with the differential between the best of those options currently sitting around 0.9%. That means that if the Bank of Canada decides to cut its rate at least 4 times in the next 3 years, the variable option may be the best choice. Otherwise, you have to make up for the additional interest that you're paying while you wait for them to catch up, Zlatkin pointed out. But it also offers a lot of flexibility for people who believe rates are going to come down further. Breaking a fixed-rate mortgage, which results in a penalty of the greater between 3 months interest or the interest rate differential, can be more punitive than breaking a variable rate, meaning borrowers have more to lose if they want to lock in a lower rate. On the changes to the Insured Mortgage Cap, prospects are somewhat mixed for hopeful buyers. The move may open up affordability to some buyers, but many are likely to remain frozen out. I wonder how many people are going to qualify for the mortgage amount that they need, Zlatkin said. Some people who were previously priced out of townhomes and condos around $1 million could be in a position to buy, although demand may also see prices jump. The question is this going to push homes that were at the $1 million mark up to $1.2 million, or is this going to allow for people to be able to get into the homes around $1 million? Zlatkin said. And that's still a question in my mind, whether this is going to drive up prices sufficiently to keep people boxed out of the market, or whether this is going to allow for more people to get into the market. Further clarity from large insurers, including Sagan and Canada Guarantee, on the new rule is reportedly on the way in the weeks ahead. An announcement, Zlatkin said, will provide a better idea of what impact the mortgage community should expect the changes to have. Our next segment covers a significant development in the real estate industry. The Toronto Regional Real Estate Board, or TRREB, has appointed Kevin Crigger as its new Associate Chief Executive Officer. Crigger will also take on the role of President of PropTX Innovations Incorporated, a subsidiary of TRREB that provides MLS and technology services to real estate boards and associations. This move marks a new era of transformative advancements across the real estate sector. Kevin Crigger's strategic vision and unparalleled expertise are set to complement the work of Chief Executive Officer John Michel, making TRREB's leadership team even stronger in the ever-changing real estate industry. After an extensive search, TRREB announced Crigger's appointment, highlighting his role in overseeing the strategic direction of the organizations and shaping their operations for the future. Crigger will also play a key role in fostering partnerships and collaboration with stakeholders. Kevin Crigger expressed his excitement about his new roles, saying, "I am honored to join TRREB as Associate Chief Executive Officer, and I look forward to working with John and the entire leadership team to advance TRREB's services and engagement with members. The TRREB community is inclusive, diverse, and impactful, and I am honored to serve a community that has had such a positive impact on my life." Before joining TRREB, Kevin Crigger was an active realtor in Toronto for more than a decade. His multi-award-winning experience in both resale and new development sales brings a comprehensive and unique perspective to his new roles. As a highly respected figure in the Canadian real estate industry, Crigger previously served as the president of both TRREB and the Ontario Realtors Care Foundation, as well as chair of PropTX Innovations Incorporated. His contributions have helped shape PropTX's initiatives since its founding. Crigger has also served on numerous committees and task forces at the Ontario Real Estate Association and the Canadian Real Estate Association, as well as TRREB, the Ontario Realtors Care Foundation, and the Real Estate Council of Ontario. He is eager to continue collaborating with realtor volunteers and association staff across the country, leveraging collective experience and expertise to support and empower real estate professionals in their service to clients and communities. As president of PropTX Innovations Incorporated, Kevin Crigger is dedicated to leveraging technology to redefine real estate services. His leadership will emphasize delivering seamless processes, enhancing member services, and fostering widespread industry collaboration. Crigger's focus on technology aims to ensure that realtors and consumers benefit from cutting-edge tools and efficient, streamlined processes. Chief Executive Officer John DeMichelle welcomed Kevin Crigger to the leadership team, stating, "Kevin's in-depth knowledge of the real estate industry, coupled with his innovative mindset, make him an invaluable member of the team. His guidance is essential as we continue providing our members and their clients with advanced tools and services." TRREB President Jennifer Pierce added, "Kevin's proven track record of driving innovation and building strategic partnerships will be instrumental in achieving our vision of empowering realtors to promote sustainable and thriving communities. He is an exceptional choice for our future initiatives." PropTX Board Chair Paul Barron also commented on Crigger's appointment, saying, "The appointment of Kevin marks a significant milestone in our journey to redefine real estate technology. His business acumen and results-driven leadership will help continue to propel PropTX's vision forward, advancing our technological offerings to better serve the realtor community in an ever-evolving landscape." The Toronto Regional Real Estate Board is Canada's largest real estate board, with over 73,000 members. TRREB provides robust support, advocacy, and educational resources to its members, fostering excellence and driving innovation within the real estate industry. PropTX Innovations Incorporated, as a wholly owned subsidiary of TRREB, delivers innovative MLS and technology services to real estate boards and associations, with a projected user base of more than 95,000 by the end of the year. PropTX is the largest MLS in Canada and the third largest in the world. Our final segment today takes us to British Columbia, where the New Democratic Party, or NDP, has announced a new initiative to fast-track prefabricated homes as part of their housing plan ahead of the upcoming election. This move aims to address the housing crisis that has been affecting the province for years. NDP leader David Eby recently visited Cumberland on Vancouver Island to promote this plan. Eby emphasized that pre-built homes would not only cut waste and reduce emissions, but also take advantage of advances in the industry to produce high-quality, aesthetically pleasing homes. He likened the process to assembling Lego blocks, saying, "The idea is pretty straightforward. In a controlled factory environment, you can build faster, you can build with less waste, and the homes that are built are more consistent and more efficient, and it's cheaper." On the other side of the political spectrum, BC Conservative leader John Rustad announced his own housing strategy at a news conference in Surrey. Rustad's plan focuses on ending multi-year permit delays and aims to get homes built at a speed and scale necessary to tackle the housing crisis. Rustad proposed redesigning the approval process for home building, setting a 6-month limit for rezoning and development permits and a 3-month limit for building permits. This means that we will significantly be able to improve the time frame it takes to actually get construction happening in this province, and we'll be working with city halls across the province to be able to meet these timelines, Rustad stated. In a news release, the BC Conservative Party indicated that if a clear yes or no is not issued by a city within the specified limits, the province would step in to issue the permit. Rustad also mentioned plans to remove NDP-imposed taxes on housing, support transit-oriented communities, reform development cost charges, and make taxes fairer for homeowners. "We have so much regulation that has been put in place associated with housing that it makes it really difficult for anybody to be able to actually get through and build things, not to mention the cost," he said. The NDP's plan includes working with industry, municipalities, and First Nations to create a province-wide framework for prefabricated homes. This would establish a set of pre-approved designs to expedite the permitting process. The party also aims to develop skills training programs to support the prefabricated home construction industry. Eby highlighted that Scandinavian countries have successfully embraced factory-built homes, which offer a faster and more cost-effective alternative to traditional on-site construction. EB said, "By growing BC's own factory-built home construction industry, everyone from multi-generational families to municipalities will be able to quickly build single homes, duplexes, and triplexes on land they already own." The NDP government passed legislation last year that has been described as a game changer for the factory-built home construction industry in the province, which currently boasts 10 certified manufacturing plants. Tanya Formosa, owner of Muchalat Construction Limited, one of the certified manufacturing plants, noted that pre-approved structures significantly speed up the building process. Her company's projects usually take 12 to 13 months to complete, from startup design to getting the house on site. "If everything was in place and fast-tracked at the beginning and we were able to just fly along, it would probably take 3 months off the full schedule," she said. Despite the advantages, Formosa acknowledged a potential drawback: the risk of creating cookie-cutter neighborhoods due to the use of pre-approved designs. "Unfortunately, what happens in your jurisdiction, in your city, is it ends up looking a lot the same. But what are your priorities?" she questioned. In summary, both major political parties in British Columbia are proposing bold solutions to the housing crisis, albeit through different approaches. The NDP is focusing on leveraging technology and factory-built homes to expedite construction and reduce costs, while the BC Conservatives are aiming to streamline the approval process and reduce regulatory burdens. That's all for today's episode of the Ontario Mortgage and Real Estate Insights podcast. I hope you found these updates insightful and helpful. We'll be back next time with more news and insights to keep you informed about the ever-changing real estate and mortgage landscape in Ontario and across Canada. Thanks for tuning in.